Good afternoon and welcome to this webcast on financial services and banking regulation. In the white heat of the financial crisis, Lord Turner, chairman of the Financial Services Authority, said, "We need radical change. Regulators must design radically changed regulations and supervisory approaches, but we also need to challenge our entire past philosophy of regulation." The question is, therefore, what are we going to get? What are the risks of the, quote, business as usual approach of the industry? And what does this mean for the survivors and some of the victims of the financial crisis? And what opportunities and pitfalls are there for those seeking some form of relief or compensation for losses arising from the credit crunch? My name is Deborah Sabalot, and I'm an independent solicitor and a professional associate of Outer Temple Chambers, and my colleague is Barrister Michael Patchett-Joyce. The members of Outer Temple Chambers have collaborated on a special report on financial services and banking regulation for Butterworth's LexisNexis that will be published earlier in the new year, and which draws together a number of the strands and looks at the future of how the credit crunch will resolve itself in a new financial services framework. The report contains chapters on the various initiatives for financial services and banking regulation in the UK and in Europe, the recent developments in market abuse and insider dealing, credit crunch litigation, and the issues surrounding claims arising from the giving of investment advice. In this podcast, we are going to look at some of the most recent developments, including the implications of the Financial Services Bill published last week, the opposition's response, and Europe's roadmap for redrawing the framework for financial services regulation and banking in the single market.
Deborah, thank you very much for a great introduction to the subject and also to the book, the special report on financial services and banking regulation. Can I take you back to what you started off with, which was the quote from Lord Turner, where he spoke about regulation, and I fully see the need for enhanced regulation, supervision, greater and better supervision. But he also spoke about a fundamental change of philosophy. Now that's big ticket stuff. How are we going to achieve that?
Well, I think that has been the big question over the last year. If you take us back to, as I say, the failure of Lehman Brothers, and we've had from politicians a lot of talk about changing that philosophy. But again, it is very difficult to see how they are going to completely change the way that we have traditionally approached prudential supervision, conduct of business supervision, in banking and financial services. A lot of the discussions have been around the whole question of prudential supervision and ensuring that no financial institution, whether it be a bank, building society as we had here, or other types of financial institutions, including hedge funds and others, are too big to fail. And do not have to be bailed out by the taxpayer. That seems to be what's really driving on the political front. But from a financial services regulation point, I think you're right. Where are we going in terms of that philosophy? How are the regulators and the politicians changing or intending to change their approach? I mean, we have an approach, and I think that the approach has served quite well over the years. Where we had a failure was not so much the philosophy of regulation. What we had was a failure of supervision, where regulations were, particularly the approach of light touch regulation, was being misapplied, and effectively firms took advantage of that.
You use the phrase "too big to fail." So does that mean we can't really tear up the rule book and start all over again, but it's got to be pretty radical surgery?
Yes, I think that's probably right. I mean, again, when you think about it, we've just had certainly here in Europe, we've had some pretty radical surgery in terms of the implementation of the Market and Financial Instruments Directive, MiFID. And I suppose one of the issues is, of course, that MiFID only came in less than a year, 12 months before. So that obviously, to a certain extent, MiFID had not properly bedded down before, obviously, the financial crisis, which has been building over a period of time. This simply is not something that happened overnight, but this is something which has been developing probably over the last 10 or 15 years, certainly in Europe. But again, I think we will see, certainly from the European perspective, is they are tearing up effectively the rule book, in the sense that, what I understand just this week, Trichet from the European Central Bank and certainly the other European regulators are looking at, which is the creation of a single European rule book through this new framework which is being proposed, which is the conversion of the existing Level 3 committees of CSER, SEBS, and CEOPS into these new European authorities. So to that extent, yes, I think we will see a fairly fundamental change, certainly in their approach to the way that the regulatory framework operates.
Those are the three supervisory authorities, which
yes,
we
that's
may
right.
come back to. But before we go on to the European side of things, and continuing with the theme of radical surgery, how big a scalpel is being wielded in the Financial Services Bill as outlined in the Queen's speech? I mean, for example, one knows that it contemplates a Council for Financial Stability, which would be back to the tripartite agreement between the Treasury, the Bank of England, the FSA. So not much radical there, but maybe the Conservative Party plans are an interesting counterpoint to that. What else is the Financial Services Bill looking at? The ability to take action on bankers' pay. What I think has been described as a living will for banks, allowing an orderly write-down in the event of trouble and in financial stringency. And the ability for consumer group actions, which we've seen emerging in other aspects, both of European policy over the last few years and indeed domestic initiatives. One thinks about the Enterprise Act. Is it radical?
No, I don't think it's radical at all.